What's up, everyone? Welcome back to Tony Crypto and Stock News. I'm your host, and today we are breaking down the single most important piece of legislation crypto has ever seen in the United States. It is called the Clarity Act, and the Senate votes on it this Thursday. I'm not kidding. May 14th, 10:30 in the morning. The Senate Banking Committee votes on whether to advance this bill, and everything after that moves fast. Whether you bought your first Bitcoin last week or you've been in crypto for years, this episode is for you. We're going to break it all down in plain English. The good, the bad, and the ugly. Let's go. First, why does this bill even exist? Here's the deal. For over 7 years, there was no real rulebook for crypto in America. No one knew which regulator was in charge. You had the SEC, the Securities and Exchange Commission, saying most crypto tokens are securities just like stocks. And then you had the CFTC, the Commodity Futures Trading Commission, saying, wait, no, a lot of these are commodities like gold and oil. The result? The SEC just started suing people. Over 100 enforcement actions, filed against exchanges, developers, token issuers, without ever writing a single clear rule. They'd sue first and let the courts figure out the definitions later. That's what experts call regulation by enforcement, and it pushed billions of dollars in crypto activity offshore. The Clarity Act says, enough. It's time for an actual rulebook. At its core, the Clarity Act takes every single crypto asset and puts it into one of 3 buckets. Here's how to think about it. Bucket 1, digital commodity. This is for decentralized coins and coins that run on their own, with no company or team controlling them. Think Bitcoin, Ethereum, XRP, Solana, Dogecoin, Cardano. These would be regulated by the CFTC, just like gold or oil. Lighter rules easier for big institutions to hold. Bucket 2, investment contract asset. This is for tokens sold by a centralized team that promised you profits from their work, more like a stock. The SEC stays in charge of these and the rules are stricter. Bucket 3, payment stablecoins. Think USDC and USDT, dollar-pegged tokens. This one's already handled by a separate law called the Genius Act, which passed in 2025. The 2 laws are designed to work together. Simple as that, 3 buckets, 1 rulebook. That's what 7 years of chaos was missing. Now here's something most channels won't tell you. The Clarity Act hasn't even passed yet, and there's already been a historic ruling. On March 17, 2026, the SEC and the CFTC jointly released a 68-page document that officially classified 16 cryptocurrencies as digital commodities. Not securities. Commodities. The list includes Bitcoin, Ethereum, XRP, Solana, Dogecoin, Cardano, Avalanche, Chainlink, Polkadot, Hedera, Litecoin, Bitcoin Cash, Shiba Inu, Stellar, Tezos, and Aptos. This is the Clarity Act already working in spirit and before it's even law. It means XRP's legal nightmare from 2020 is over. It means spot ETF applications for SOL, ADA, and AVAX are now unblocked. And it means institutional money. The big funds, the pension managers, the hedge funds, finally have the green light they've been waiting for. All right, if this bill passes, who wins? Let's go through them. XRP is the biggest winner, full stop. It removes the SEC enforcement cloud that's been hovering over it since December 2020. Spot ETFs become possible. Institutional participation opens up. Solana, Avalanche, Cardano, and Chainlink. All officially commodities, all now in line for their own spot ETFs. Asset managers have said they're ready to file the moment the framework is locked in. Coinbase, Kraken, and Gemini, the big compliant US exchanges. They've spent years begging for rules instead of random lawsuits. If this passes, they're the ready-made infrastructure for the next wave of crypto adoption. And importantly, volume that fled to offshore exchanges like Binance starts coming back onshore. Crypto.com, Circle, the stablecoin company behind USDC, and Ripple also benefit. Circle's business model gets clarity. Ripple can finally expand XRP listings everywhere. Institutional investors and pension funds, endowments, hedge funds, They have been sitting on the sidelines waiting for exactly this. Just the March 17th SEC CFTC ruling alone pulled $4.5 billion in Bitcoin ETF inflows in a single month. The full Clarity Act being law, that's a bigger wave. And finally, the United States itself. Americans moved over $1 trillion in crypto in just the first 7 months of 2025, but most of that activity happens offshore because of regulatory uncertainty. JP Morgan called the Clarity Act a positive catalyst for the second half of 2026. Now, the other side, who loses if this passes? DeFi protocols, platforms like Uniswap and Aave, face new compliance burdens. Some decentralized protocols could fall under Bank Secrecy Act and anti-money laundering rules. Critics say this adds obligations that DeFi was architecturally never designed to handle. Offshore exchanges. This bill pulls U.S. trading volume back onshore. Any platform that benefited from years of American regulatory chaos, that competitive advantage goes away. Smaller exchanges that used high stablecoin yield as a hook to attract users, that model is over. Under the compromise, you can't just pay people interest for parking money on your platform. You have to give them rewards tied to actual activity. If you're a retail investor who is earning passive yield just for holding USDC or USDT, that ends under this deal. You have to actually use the platform to earn rewards. Unregistered token issuers, the era of vague token launches with no disclosure is over. A new securities-style disclosure regime kicks in, and here's the ironic one. Traditional banks. The American Bankers Association, the Bank Policy Institute, the Consumer Bankers Association, the Financial Services Forum, and the Independent Community Bankers of America all issued joint opposition letters this week. They don't want stablecoins competing with bank deposits and even at reduced yield. Okay, this is the part other channels won't touch. 3 real threats to this bill that could blow it up before it becomes law. Fight 1. The stablecoin yield war. In January, Coinbase CEO Brian Armstrong publicly pulled the company's support for the bill because of a provision that would have banned stablecoin yield entirely. Banks pushed for this to protect their deposits from competition. Then last week, Senators Tillis and Brooks brokered a compromise. Passive yield, banned. Activity-based rewards, allowed. Armstrong's response? Mark it up. Coinbase is back in. Fight 2. The Trump ethics bomb. This one is explosive. Senator Gillibrand, a Democrat who actually supports crypto legislation, drew a hard line at the Consensus Miami conference this week. Her exact words, "There will be no one voting for this bill without an ethics provision." Why? Because Trump and his family have earned an estimated $1.4 billion from crypto through the Trump memcoin and the World Liberty Financial DeFi project. Democrats want a ban on senior government officials, including presidents and their families, from profiting off the crypto industry while they're regulating it. The White House says it won't accept language targeting any single office holder. This standoff could kill bipartisan support entirely. Fight 3. Banks trying to kill it entirely. 5 of America's biggest banking trade groups issued a joint statement days before the May 14th markup, rejecting the stablecoin compromise and demanding more edits. Senator Tillis responded publicly and bluntly, "Some in the banking industry may simply not want either of these things to happen. We respectfully agree to disagree. So where does this go from here?" Here's the exact roadmap. May 14th, this Thursday, Senate Banking Committee votes on the bill at 10:30 a.m. Eastern Time. This is the first big gate. If it passes committee, June. 4 working Senate weeks for the full Senate to vote. It needs 60 votes to clear the filibuster threshold. That means bipartisan support is not optional, it's required. After that, it has to be reconciled with the Senate Agriculture Committee's version, then go back to the House. The White House wants a signature by July 4th, America's 250th anniversary. Senator Gillibrand is more cautious. She says first week of August, if we're lucky, August 10th. Congress goes on summer recess. Miss that deadline, and Senators Lummis and Moreno have said this could stall until 2029. The current odds? Polymarket has it at 67% passing this year. Kalshi has passage before August at about 49%. Galaxy Digital's head of research says roughly 50-50. Ripple CEO Brad Garlinghouse says the past week was a big positive shift. Bottom line, Thursday's vote is the most important crypto policy moment in U.S. history. We are covering every move. Drop a like if this was valuable. Hit subscribe so you don't miss the follow-up episode. Because whether this bill passes or fails, we are right back here breaking it down. If you want to get into crypto or stocks, check the description. I use Kraken, one of the most trusted exchanges in the game. As always, I'll see you in the next one. God bless.